A very warm welcome to the Booms and Bust Show. Good morning, good evening, good afternoon. It is Monday, the 20th of November, and the Booms and Bust Show is a weekly podcast that I do generally on a Monday afternoon, published by late afternoon, early evening. It's an hour-long show, and we talk about free market capitalism. We talk about markets, we talk about economics. I try to be humorous slightly sometimes, because you gotta laugh, ain't you? Because if you don't laugh, you'd probably hang yourself given what's going on. My name is Jonathan Davis, and you should check us out on Twitter at Booms Busts Show, where I tweet a lot, I retweet a lot, and I truly get the message out that socialism is rubbish and free markets are absolutely amazing. And it's so difficult to argue against, because as what's her name, the shadow foreign secretary couldn't do on the Sunday politics shows at the weekend, or was it Question Time on the BBC? I think it was on Thursday night. They cannot say a single country that is socialist that has been successful. I've told you before, you might have seen the clip of, what's her name, I don't know what her name is, the Shadow Foreign Secretary, Labour lady, no doubt one of the Islington set and all that. She's a lawyer, she's a QC, she's disgusting. I've said to you before that whenever they try and think of a country which they believe to be socialist and successful, they always come out with either Sweden or one of the other Scandinavian countries, and that's exactly what she did. Well, I've told you before that according to the World Bank, the Scandinavian countries are in the top 10 free markets in the world. So how they can be capitalist and socialist at the same time, absolute arrant nonsense. The fact that they have high income taxes does not of itself make them socialist. Au contraire. The fact that they have freer markets than practically every country on the planet, that's what tells us they are not socialist. Now, on this week, or on this day in history, in 1954, I see a tweet that Britain defeated France, what again? To capture the first ever Rugby League World Cup in Paris. How amazing would that be? Now, was that Britain or was that England? I don't really know. But good on you, lads. Excellent stuff. Talking about the BBC, we have some evidence, you'll take it or leave it as you will, of the BBC's blatant bias for Remain and therefore elitism, the status quo, and conservatism with a small c, reactionary, and so on. Percentage of guests on the Andrew Marr show, which is just about their flagship political interview program on a Sunday morning at about, 9 or 10 o'clock in the morning. I never watch it myself because it is absolutely dire. Andrew Marr obviously is one of the Islington set. He's an elitist. He's an extremely highly paid guy by the BBC, which of course is publicly funded, and he loves everything about the state and so on, except when it's someone who is a free marketer. So the statistics are that of the percentage guests who on the Andrew Marr show who are pro the EU, 85%. Brexit guests, 15%. And then the other statistic I have of the other main political show, debate and interview and discussion on a Sunday morning on BBC One is the Sunday Politics show. Little better. Pro-EU, 73%. Brexit guests, 27%. Just a small sample of the disgusting bias on the network that pretends over and over again to be neutral. Nothing, of course, could be further from the truth. It is particularly disgusting because, overwhelming percentage of guests on these shows are anti-Brexit, therefore pro-EU, and that's the same for Question Time, which is beyond belief. I mean, it's 4 out of 5 or 5 out of 5. Rarely is it 3 out of 5, and never is it a minority pro-EU. And all the other shows that you can think of, they're all very hugely pro-EU, which is disgusting. Why? Because 52% of the electorate, or of those voting, voted to Brexit, voted to leave the EU. On top of that, I would reasonably suggest that opinion polls today are about 2-1 for leave. 60 or 70% leave, 30 to 40% remain. And yet still the national broadcaster puts on far more remainers. On top of that, the House of Commons on the 14th of November voted 318 to 68 to approve Clause 1 of the EU withdrawal bill. In other words, the disgusting European Communities Act 1972, 45 years ago, will be repealed on the day we exit from the EU. Now, we are told exit will be the 29th of March, 2019. 29th of March, 2019. It hasn't happened yet. And Theresa May and David Davis and all the other idiots are having discussions with the EU whilst having their rolling over and having their tummies tickled. It is quite disgusting. John Redwood MP absolutely gets it. He says, what on earth's going on? We don't owe them a penny. And yet May and Davis and Fox and all the rest of them, they're debating whether or not to give them £30 billion or £60 billion, which is, of course, between 3 and 6 years of our recent funding levels. And that is, of course, beyond March 2019. Of course, we're still paying them 10 to 15 billion pounds a year. Quite disgusting. And of course, the only reason why the EU wants this money is so that the bureaucrats themselves can carry on living like billionaires in their private jets, their seven-star hotels, their 7-course meals with €150 red wine followed by €1,000 champagne or preceded, whatever it is, you get the point, until they themselves retire. After that, they could give 2 hoots because they'll be on massive 6-figure index-linked pensions, living it large like the multimillionaires that they are on the public purse. I'll have a quick drink, then we'll move on. Last week, Mohammed Ismail, aged 22, appeared in court in Birmingham, charged with raping a 14-year-old girl at Witton, Witton, train station, when she flagged him down for help after being raped by Kuram Rahe, aged 27. Let's not forget this, like everyone else in the media has. Can you imagine being that 14-year-old girl and the enormous scars in her mind, the psychological damage made to that poor teenager, which will now be with her for the rest of her life, long after the physical scars disappear? Just awful. They are monsters. They are disgusting so-called human beings. Is there anyone you know who, when flagged down by a teenager clearly in distress, would then go and rape her? If there is, stop following me on Twitter. Stop listening to this show. In fact, go yourself. As Maggie said, the problem with socialism is you eventually run out of other people's money. Venezuela has officially defaulted, which means that it cannot pay the interest on its massive debts. Now, for those listeners who don't know, Venezuela has the largest reserves of oil in the world. Yes, more than America and more than Saudi Arabia. And it's just gone bankrupt again. Because it was run by Chavez, the communist. It's now run by Maduro, the communist. And as I've told you before, Chavez's daughter, Chavez is no longer alive, his daughter is reported to be worth over $4 billion. This is what happens in communism. You think the people who run North Korea, Venezuela, Zimbabwe, the old Soviet Union, you think they weren't rich beyond Croesus? Of course they are. But of course, Venezuela isn't real socialism. Talking about real socialism, we've seen the scenes of elation and joy in the headquarters of ZANU-PF, which is the political party that Robert Mugabe had led for 37 years, I think is the number. And you will remember the scenes of elation and joy when Rhodesia gained independence from the United Kingdom, turned itself into Zimbabwe, and of course a communist state. And at the time, Rhodesia, which had been the breadbasket of Africa, with incredible farms run, of course, by British expats largely, those Rhodesian farmers, whites, were slaughtered and their farms taken away from them because, of course, they were racists. They may have been racists. I don't know if they were or not. But that does not mean they should be hung up like Negroes in the American South, strung up and hung up and burnt. And the excuse, of course, is that, well, they did it to our brothers in the American South. And also, we need the farms to feed our brothers here in Zimbabwe. And anyone who believed that, and of course the British media lapped it up, the African media lapped it up, it was nothing to do with race. It was all about money and power. And as we know, Mugabe and his cronies became fantastically rich, whilst the farms went downhill and indeed into disrepair. Because that's what happens when communists take over successful businesses. You know, I will bet you, as someone said, I can't remember the person who said this, might have been Milton Friedman actually, you could put a communist into the Sahara Desert, and within a short space of time there would no longer be any sand. Because of course, now that Mugabe has been ousted by the Zimbabwe generals and their tanks, and we see the scenes of elation and joy in the ZANU PF headquarters as the Deputy Prime Minister takes over. And all you have to do is look at a photo of Mugabe and this new guy, and you will see that they are two peas in a pod. It is all about money and power. And what do we see happening in South Africa? A couple of decades after the blacks took over, the communists, should I say, the African National Congress took over in South Africa, where we know that whites were driven out of the country. My own dentist, one of goodness knows how many hundred white dentists who had to leave South Africa. How many dentists have they got left? And the white farmers of South Africa, do you know how many have been murdered now? 80. And their farms confiscated by the communists. It's pretty obvious that South Africa, with all its amazing minerals and natural resources, is a basket case. And the idea that South Africa will ever be economically successful when it's run by communists, please. So, when the junior doctors in the United Kingdom were up in arms about goodness knows what, they were saying, whatever it is the government's doing, it's not safe. The NHS is not safe. So the government says, here's some more money. The junior doctors, do you know what? It's all safe now. The train drivers, we can't make these changes. We can't go to driverless trains. We can't close the booths in the railway stations. It's not safe. The government, here's some more pay. The train drivers, do you know what? It's all safe now. The total compensation for New York tube workers, or as they say in America, subway workers, now averages, guess, $50,000? $100,000? Average? $150,000, Jonathan, don't be ridiculous. subway workers' average pay, including the cleaners, $150,000? I am being ridiculous, because actually the average total compensation for New York subway workers is now $170,000 of your US dollars. And for managers, it's $280,000. Do you remember when we used to giggle at how much Greek bus drivers were earning? And it's no wonder that Greece went bust. There's only one point I want to make about on economics today, at the 21-minute point. Government borrowing rates are the interest rates at which governments borrow. They can borrow over a week, over a month, over 3 months, over a year, over 2 years, over 5 years, 10 years, 20 years, 30 years. Indeed, there are even bonds that are never redeemed. So they're literally time unlimited bonds. However, a good indication of where inflation is heading is when you look at the 5-year government borrowing rates. And, right at the bottom end, you've got Germany, which has a negative 0.3 5-year rate. Negative 0.3%. People actually have to pay the German government to borrow its money. Japan, you have to pay the Japanese government 0.1% per annum over 5 years. Now, anyone who's uninitiated in this market, you're going crazy right now. How is it possible that you pay a country to lend money to them? You do so because you believe that that country has deflation. Thus, the value of your loan, which gets redeemed in 5 years' time, paid back in 5 years' time, will actually give you more purchasing power in 5 years than, if you like, hold it in cash. So let's say you lend, for simplicity, 100 euros or 100 pounds or whatever it is to the German government. You have to pay them 30 pence, I think that's right, 3% would be £3, 30 pence a year. So that means you pay them £1.50 over 5 years, but you're betting on your £100 being worth more than £101.50 in 5 years' time. If you don't get the maths, go back and listen again. Spain, they do pay 0.25% per annum. Italy pays 0.6%. The UK pays 0.8% over 5 years. Canada pays 1.7%. The United States pays 2%. Australia 2.1%. But get this. You've just heard how relatively low it is to borrow over 5 years for Germany, Japan, Spain, Italy, UK, Canada, US, Australia, between minus 0.3% and plus 2.1%. China is now paying 4% to borrow money over 5 years. Now, clearly, that is significantly ahead of every large-scale economy in the world. That's a problem, because China has absolutely vast amounts of debt. Now, probably China is going inflationary. And they will get to the stage where they can borrow no more and cover it by operations, by current profits, current taxes, whatever. And when you look at Japan didn't go into mega borrowing overdrive until about 10 plus years ago, 10 to 15 years ago. And Japan is way long past the stage where they can fund their borrowing. They're now borrowing ad infinitum, and I can see Japan going hyperinflationary within 10 years and possibly even 5, because their money will just become literally worthless. It'll be like Weimar Germany's notes in a wheelbarrow, just like Zimbabwe, just like Venezuela. Venezuela's at 2,000% per annum inflation, and that could easily, by next year, the way these things go, unless it gets sorted, that could go to 1,000,000% inflation within 12 months. It could. I don't specifically know what the catalyst would be for, but that's how quickly it can go. China's already at 4% compared to 2, 1 or 0 for other major countries. That's something to watch out for. I'll tell you what it suggests. It suggests that the Chinese currency is going to continue to devalue. So if China is borrowing at significantly higher interest rates than the rest of the world, are they leading the pack so that we're all going to be paying higher interest rates in due course? Who knows? I just say it's something that we really need to watch. Talking of interest rates, we are in fact officially in La La Land, because the French company Veolia, which is like a utilities company, they empty the bins, I know, here in the UK and things like that. I don't know what else they do. They have just issued a 500 million euro bond, which means that they are borrowing 500 million euros over a 3-year time period. The maturity is in November 2020. Now, Veolia is what's called a BBB rated company, which means it's not even A rated, which means it's not a top prime borrower, and yet it's being able to borrow at minus 0.026% per annum. Okay, it's a tiny, tiny minus, but the fact that a really unimpressive company can borrow and be paid to borrow, we're officially in La La Land. Does that mean that the market still believes that we're going into deflation? Actually, it does. Or the market's crazy. But I don't know. The market's not normally crazy. But it is an absolutely crazy situation that a BBB company can borrow and be paid to borrow. Who's lending it? Well, it'll be sovereign wealth funds, hedge funds, pension companies, and very likely the majority will be the pension companies, because they normally don't know what the hell they're doing. On the big picture for the markets, there's a couple of charts there, and let me remind you that when you go to the Twitter account, Booms Busts Show, you'll see the pinned tweet. Click on it and then scroll down, and you'll see I'm asking you there if you would kindly just first of all click on the iTunes link and star rate the show, because that's really there's only a couple of ways that people are going to get to hear about this show. One, if you'd kindly retweet it on Twitter, that'd be really great of you. And secondly, if you star rate the show, the more people who simply go there, you don't have to make any comment. You can if you want, it'd be great if you do. But if you simply just click on the number of stars that you feel about the show, that is a means by which it will get a higher rating within iTunes, and it will suddenly start appearing on people's radars. Scroll down further and you'll start seeing charts and pictures that I'm using in this podcast. There is a very long-term chart of the Dow Jones Transports Index. This is basically truckers and train companies, airlines, relative to the wider market, the S&P 500. And this is a 50-odd year chart. In fact, it's a 60-odd year chart, extremely long-term chart. And you can see that relative to the S&P, the Transports Index just a few years ago got back up to the peak that it had seen in the very early 1990s and the very late 1940s. And from the 40s and from the 90s, we saw the transport index crash for years, indeed decades, against the wider market. And what's notable is that a falling transport index to the wider market is indicative of A, a softening economy, and B, a softening stock market long term. Charles Dow invented what I believe is the very first technical analyst's tool, the Dow theory, over a century ago. And you know what? It still works. And it essentially says that the transports index has to be moving in parallel with the Dow Jones 30 index, which is the granddaddy of stock indices. And if they are not in agreement, then something is up. So if the transports is up and the Dow Jones is down, then you cannot assume the direction of the Dow. If, however, the transports is up and the Dow is up, or the transports is down and the Dow is down, then you can accept the direction of the Dow. So it looks as if the transports relative to the wider market is heading down. This is not positive long term for, US shares and perhaps global shares. However, don't necessarily read too much into it yet, because go to the next chart. And here we see global stock indices using their market capitalizations. So, of course, the S&P takes up 40 to 50%. Sorry, the American market takes up 40 to 50% of this index. And then you get every other index going. And there's no question that global stocks are in a bull market. And they have been since late 2015. And I had a discussion on Twitter with some guy. I won't say he is. He's got his heart in the right place, but he doesn't know as much as he thinks he does. He was saying to me, the bull market started in 2009. Well, I've got news for you again, matey. The bull market probably started in late 15, early 16. There have been bear markets since 09. And what's interesting is that the bull market is consistently going. You can see that. It's a very clear trend up since late 15. And most importantly, it's broken above the peak. Global stocks have broken above the peak of late 2007. This is very bullish. I then go to this next chart of global stocks versus government bonds. And to put all this into context, in 2008, global stocks, as you well know, collapsed and government bond prices soared. That's why you saw, if you look at 2008 there, you see stocks crashing vis-a-vis government bonds. In this case, US government bonds. Since early 2016 or the middle of last year, you've seen stocks globally rising versus government bonds. Now, actually, they haven't broken up above the resistance, which we've seen since 2011. You see that downtrend black line? They're only slightly above, but there's no confirmation there yet. They could yet come into the wedge or the triangle that you see with the support which started 2009, then touched again in 2012, it then touched again in 2016. It could come back into the wedge. If that index that we're looking at there, stocks versus bonds, decides to rally from here, then I can pretty well tell you that not only do you not want to be in government bonds, but I've been saying it to you for weeks now, we might have seen the peak in government bonds in the summer of last year for 40 years. And therefore we might have seen the trough in interest rates for decades. If stocks get going versus government bonds. At the moment, they're just hovering around the top, shall we say. We actually need to see it take off like a rocket ship before we can say anything has actually changed big time. In fact, it wouldn't surprise me if it actually comes back into the wedge and fools everyone who's gone short government bonds. But if that index does take off, not only should you not be in government bonds, but you should actually be invested for inflation long term. But until we get there, we know nothing. Gold, it's messy. I know it's been rising, and you know, it'd be kind of nice if it does, and so on and so on. But it's got up to about 1280, 1290. It would have to get above 1305 or 1310 for anyone to say it's back in a bull market. And that's even assuming that it gets there. The market isn't yet open, but as we speak, what's gold doing? Let me just pull up the chart. Well, first thing first, the yen is weak. That's bearish for gold. The euro is weak. That is bearish for gold. And gold at the moment is down on the day. It's at 1290. It's been in the 1295s or so. It's down from the peak last week. We don't know anything yet. The US markets aren't even open. They're open in about 20 minutes time. But at the moment, gold is not looking good. Silver's down 1% on yesterday. So, you know, it's not looking positive for gold. But, you know, you'd have to, if the yen breaks down here and you see the dollar going up to 113, 114, then pretty well that's it for gold. You're probably looking at sub 1200. I mean, really, it's still messy even then, because from sub 1200 you could still see a $400 rise in gold. But it's not looking positive as we speak right now. Now, I've talked about uranium a lot, and there's a wonderful chart of uranium itself, not uranium miners. It's gone up from $20 a pound to $25 a pound in no time at all, in November, in fact. This is pretty amazing. Why is it amazing that it's turned parabolic? Because look at the next chart of uranium. Back in 2007, uranium was over $150 a pound. We're looking in the 20s. And in previous shows, in fact last week, I showed you uranium miners are at 10 pence in the pound compared to 6 years ago. The second chart here shows the rise to the mid $20. You see it breaking above multi-year resistance. And there's Fukushima pointed out. If this is a true breakout, then, uranium is seriously hot to trot. You might want to get hold of katusaresearch.com. Katusa research, katusaresearch.com, and he's done a very interesting piece on global copper demand. And he's basically saying that electric vehicles were the driving force behind global copper demand, increasing such demand at 4.5% per annum for the next 25 years. And you might not think 4.5% compound per annum is a great deal, but when you've got very tight supply and demand already, you could have something very, very interesting in copper and copper miners for, until your retirement, basically. It clearly, if you're in your 40s and 50s. You might want to subscribe to my Booms and Busts report, which I write every couple of months. There'll be one coming out at the end of November or early December. All you have to do is send me an email at jd@theboomsandbustsreport.com. jd@theboomsandbustsreport.com. You'll never be junk mailed. And finishing with a couple of quotes. Gosh, the time has flown by. It's been such a quick show. The UK budget is upon us this Wednesday. That'll be the 22nd of November. The UK budget is the annual statement by the Chancellor of the Exchequer, or the finance minister of the country. In other words, aka the party political broadcast. Remember that politicians never do anything to help us. Never, in block capitals, underlined in red. They only do things to help themselves get re-elected or elected. They never do anything to help us. As Robert Heinlein said, taxes are not levied for the benefit of the taxed. And Will Spencer said it beautifully. And we see this daily in the mainstream media. It's bread and circuses, listener. It's remarkable. The most frustrating thing about the ignorant is how hard they work to remain ignorant. Listener, I have had an absolute blast this show. Monday, the 20th of November 2017. I hope you retweet the show. I hope you go on iTunes. All you have to do is click the link and star rate the show. Send me an email, jd@theboomsandbusshow.com, jd@theboomsandbusshow.com, and I'll put you on the Booms and Bus Report list, jd@theboomsandbusshow.com, because I think I said it wrong previously. I'll see you next week.